Welcome to our channel. In this video, I talked about how well the Indian stock market works and how investors can find opportunities where the market might be making mistakes. I also talked about some tools and techniques that Indian investors can use to find places where the market might be making mistakes and missing opportunities. By understanding market efficiency, we can navigate the complexities of the Indian stock market more effectively and make better investment decisions. The Indian stock market efficiency means how well the market prices stocks based on all available information. It's a big concept in finance and we have studies it a lot in India. There are three main types of market efficiency. Weak form efficiency says that stock prices today only show information from the past. This means that using things like past price charts, technical analysis won't help you beat the market over time. Semi-strong form efficiency says that stock prices today show all public informations like past price charts. This means that if you use public information to make investment decisions, you won't be able to consistently beat the market either. Strong form efficiency says that stock prices today show all public and private informations. This means that even if you have private information that others don't have, you still can't use it to beat the market over time. Let us talk about the research studies on how efficient the Indian stock market is. Many studies have been done on this topic. Here are some key findings. A study by Subes VK and M.A. Joseph from 2023 looked at 5 popular stocks in the Indian stock market from April 2016 to March 2017. They found that the Indian stock market is not very strong form efficient. This means that there are undervalued stocks in the market and investors can make extra profits by choosing the right ones. Another study by Jain and some other researchers in 2020 looked at the efficiency of the Indian stock market using data from the Bombay Stock Exchange and the National Stock Exchange from April 2010 to March 2019. They found that the Indian stock market is weak form efficient. This means that investors can do better than the market by using past informations. A study by Ilan Govan and some other researchers in 2022 examined 9 BSE broad market indices from January 2011 to December 2020. They also found that the Indian stock market is weak form efficient. This means that the market does not quickly respond to new information, giving investors the chance to do better than the market. In simple words, these studies tell us that the Indian stock market is not always efficient and there are opportunities for investors to make more money by finding undervalued stocks or using past information about the market. The market being not perfect means investors can earn more money by picking stocks that are undervalued. This is hard to do and most investors will not be able to beat the market all the time. Companies that invest money from others cannot just tell people about possible returns to get them to invest. They must make sure people understand that the market is not perfect and that investors need to be careful when making decisions. The way the Indian stock market works has an impact on the economy as a whole. Where there is not enough or wrong information, it can lead to big problems that affect everyone. If investors make decisions based on wrong or incomplete information, it can make the economy unstable. This can cause the stock market to go up and down a lot, which can be bad for everyone. Investors need to understand that the market is not perfect and they cannot just rely on what has happened in the past or on technical analysis to make good decisions. They need to be aware of the possibility of undervalued stocks and change their strategies accordingly. The rules and laws in India need to be make sure that investors have access to accurate and timely informations. This can help lessen the bad effects of a non-perfect market and encourage investors to make more informed decisions. The idea that the market is not perfect goes against the efficient market hypothesis which says that the market always gives all the information investors need. This shows that more research is needed to understand how well the market works. Market inefficiency supports the ideas of behavioral finance, which focuses on how people's emotions and biases affect their investment decisions. This shows how important it is to understand how people think and feel when market investment decisions. A non-perfect market affects how financial markets works. It shows that there needs to be better and more transparent market structures so investors have access to the right information and can make smart decisions. This can help us understand by market efficiency better. By looking at more detailed data, we can learn more about market efficiency and find patterns and mistakes that may not be clear from normal data. Research can focus on how investor behaviors affects the efficiency of the market. This can help us understand how people's feelings about investing affect the stock market and how we can make investment decisions that are more informed and less likely to be influenced by emotions. Market inefficiency in the stock market is a big deal for investors, investments, companies, and the whole economy. It shows that we need ongoing research to understand how efficient the market is and how investor behavior affects it. By acknowledging and addressing market inefficiency, investors and policymakers can work together to make sure that the stock market in India is more stable and based on facts. Indian investors can take advantage of market inefficiencies to make better returns by using different strategies and techniques. Fundamental analysis. Investors can look closely at companies to find stocks that are undervalued. This involves looking at things like financial reports, management quality, industry trends, and other factors to figure out the true value of a stock. Technical analysis. Investors can use charts and patterns to try to figure out which way the market is going and when it might change. This can help them find stocks that are either too expensive or too cheap. Event study methodology. Investors can look at how specific events like earnings reports or mergers affect stock prices. This can help them make better investment decisions. Quantitative analysis. Investors can use statistical models to find patterns and mistakes in market data. This can help them find undervalued stocks and make profitable trades. Investors can actively manage their portfolios by keeping an eye on them and making changes as needed to make sure they are still in line with the investor's goals and risk tolerance. Mean reversion. Investors can look for stocks that are either too expensive or too cheap and try to make a profit by buying them at the lower price and selling them back at the higher price. Momentum trading. Investors can look for stocks that are doing well and try to make a profit by riding the wave until it slows down. Arbitrage. Investors can find mispriced stocks and use arbitrage strategies to make a profit from the difference between the market price and the true value of the stock. Risk management. Investors should use strong risk management strategies to limit their potential losses and protect their portfolios from market volatility. Exploiting market inefficiencies requires a combination of fundamental and technical analysis as well as active portfolio management. By finding undervalued stocks and using various strategies and techniques, Indian investors can make better returns than the market as a whole. However, it's important to remember that market inefficiencies don't last forever, so investors need to be flexible and able to adjust their strategies when needed. There are many tools and methods that Indian investors can use to find stocks that are undervalued or mispriced in the market. EcoBot. This is free AI tool that uses natural language processing and a machine learning algorithm to study the market, make investments, and manage portfolios. It aims to help investors make more money by using new and improved ways of investing. Trade ideas. This tool uses AI to analyze market data and suggest buying or selling certain stocks based on how well they have done in the past, how well regarded they are by financial experts, and current market conditions. TrendSpider. This tool also uses AI to find trends and patterns in market data. It helps investors find stocks that are likely to do well and make more informed decisions about whether to buy or sell them. Quant Connect. This is an open source platform that lets users create and test their own trading strategies using historical market data. It works with various programming languages and can help identify market inefficiencies. Sentient Trader. This tool also uses AI to study market data and suggest trading ideas. It gives users real-time market informations and helps them test and improve their trading strategies. Awesome Oscillator. This is a tool that helps investors look at charts and spot trends and patterns in the market. It can help identify stocks that may be undervalued or overvalued. Indian investors can use these tools and techniques to find stocks that may be undervalued or mispriced in the market. This can help them make more informed investment decisions and potentially earn higher returns. Thank you so much for watching. If you enjoyed this video and found it informative, I would like to receive your support. Please give it a like, share it with your friends and family, and subscribe to our channel.